Comparing CPF Life and Retirement Income Plan, well, the question that we need to ask ourselves is, what is our priority? Is it on a higher monthly payout or to leave a bequest amount for our beneficiary? Hi everyone, I'm Sijing, insurance specialist here at Haven. Today our topic is talking about CPF Life versus retirement income plans, which is actually better for your retirement. Today's presentation outline, first we'll be touching on 3 key areas of retirement planning, how to optimize CPF Life and its current payouts, what is a retirement income plan, comparison between CPF Life and retirement income plan, and some shortcomings of CPF Life. Should you then actually consider retirement income plan? And lastly, we'll conclude the presentation. So 3 key areas of retirement planning. So what then can we consider a good retirement? Essentially, these are the 3 areas that I'm looking at. First, a fully paid up home, so that we have a debt-free retirement to have a peace of mind. Secondly, we want to ensure to have a lifetime income stream. And essentially what we want is a stable and reliable stream of income to meet our essential spending needs. And lastly, insurance safety net in the area of medical and long-term care needs. In terms of medical, we are referring to our desired healthcare. And for long-term care needs, we are referring to our caregiving expectations. In terms of CPF Life, we are now thinking about how we can actually optimize it to provide a stream of income. And for those turning 55 in 2024, the current basic retirement sum, BRS, stands at around 102,000. And for the FRS, full retirement sum, stands at 205,000. And the enhanced retirement sum, ERS, stands at 300,000. Well, the estimated monthly payout from 65, assuming we use a standard plan, for the basic retirement sum, it may range from 820 to 880. And assuming we fulfill the full retirement sum, FRS, this will range from 1,500 to around 1,600. And lastly, if we have the ability, if we hit the enhanced retirement sum, ERS, then the money amount will increase to 2,200 to around 2,400. But of course, as we know, with the recent changes, from 2025 onwards, ERS will be pegged to 4 times of BRS. And this will work out to around 3,330 monthly payout for life. So then what is a retirement income plan? Should we then consider to top up into our ERS? It's a financial product offered by insurance company to help individuals build a steady stream of income for their retirement years. Types of retirement plans in the market. For example, it could be a fixed-term retirement income plan whereby we have a choice of the premium payment period, and we can also adjust the accumulation period and of course the monthly income that will be paid out from the plan. And as such, at the end of the plan, it still offers a lump sum payout, including the non-guaranteed bonus accumulated over the years. Another form of a retirement income plan is a fixed retirement income plan with escalation. This is actually to help with inflation. And again, depending on what age that we start, we can actually adjust the premium payment period, the accumulation period, and of course, the income that we choose to have over our retirement years. And this is actually escalating. Well, there is still a lump sum payout, a non-guaranteed bonus accumulated over the years. Another form of retirement income plan is a lifetime retirement income plan, whereby we start at age 45. Again, we can adjust the premium payment period, accumulation period, and then for the monthly income, this will be paid out over a lifetime. However, for this, there's actually no maturity benefit at the end of the day. Comparing CPF Life and retirement income plan, well, the question that we need to ask ourselves is, what is our priority? Is it on a higher monthly payout or to leave a bequest amount for our beneficiary? So let us look at the comparison to help us in our decision making. If we use a CPF Life standard plan as an instrument and meeting the FRS amount of 213,000 in 2025 at age 55, we then use a retirement income plan from a private insurer for illustration. Same amount of premiums of 213,000, and we actually put this amount at the age of 55. Okay. Currently, CPF is guaranteeing us a 4% annual interest, and while for private insurer, it's actually a projection up to 4.25 per annum currently. For CPF Life, it enjoys the highest credit rating of AAA, while from the private insurer, the credit rating is AA-. Then we look at the monthly payout from age 65 onwards. For CPF Life, the amount is 1,730 for life, while for the private insurer, the amount is 1,003 to 1,004 till age 100, which is also essentially for life. Okay, then now we look at the difference between the bequest amount and the rate of annualized return. For CPF Life, the bequest amount at the end of age 65 is 273,000, while the effective interest rate is 3.34%. As compared to the private insurer, it's a higher amount of bequest of 283,000, while a lower rate of return of 3.17%. Next, let's look at the end of age 75, what's the amount left after we continue to withdraw. From CPF Life, the amount of bequest that's available is 66,000, while the annualized return is around 2.27%. Comparing to the private insurer, the bequest amount is 128,000, while the effective interest rate is 2.14%. Again, we look at the end of age 85, while we still continue to draw down, the bequest amount for CPF Life becomes 0, while the effective interest rate is 3.74%. For the private insurer, it's 42,000 of bequest amount, and the annualized return is around 2.87%. And lastly, at the end of age 90, again, the bequest amount is 0 for CPF Life. Annualized effective return is 4.35%. And same thing for private insurer, the bequest amount is 0 and the effective interest rate is 3.18%. And lastly, one thing to consider is whether we are able to actually surrender the amount that's inside the plan. For CPF Life, it cannot be surrendered, while for the retirement income plan under the private insurer, we can actually surrender the plan. At age 65, we can surrender around 200,000, at age 75, around 118,000, and at age 85, around 31,000. So looking at the table, it shows that CPF Life definitely offers a much better return compared to a retirement income plan. Okay, having said that, there are actually some shortcomings of CPF Life. So first of all, it has a rigid payout age. For CPF Life, actually payout age starts from age 65 onwards. For retirement income plan, the payout age can be before age 65. The next question then we need to ask ourselves is, can it be surrendered to unlock the surrender value? The answer is no for CPF Life. Well, for the retirement income plan, yes, we can do so. And lastly, can the payout amount be adjusted if we want to have more income in our early years of retirement? For the CPF Life, we are actually limited to the maximum ERS amount. While for the retirement income plan, yes, we can actually adjust for a higher amount just by depending on the accumulation period that we choose, the premium amount, and the payout period. So then we see that retirement income plan does have some flexibility in the feature of payout age, cashing out from the plan, and adjusting for a higher monthly payout. Well, should you then consider a retirement income plan as opposed to topping up into your ERS? Now, some people may feel uneasy about placing a large proportion of their savings into their CPF despite its attractive interest rate due to concerns about policy risks. Policy risk could be changes in government policies regarding how individuals can actually access their CPF money, rules regarding withdrawal, and also the interest rate itself. Other considerations include we may want something much more than CPF Life in the first half of our retirement. The fact is, we will be the most healthy out of all the remaining years of our retirement. And as such, we might be busy ticking off items of our bucket list or overall spending much more for recreation fund. Option to liquidate is also important because we will never know if any medical condition that develops during our retirement years, and then we are faced with any unexpected expenses. And so the option to liquidate can actually help to mitigate this risk. A higher bequest amount, mainly in consideration to leave for our beneficiaries. Higher monthly amount if severe disability occurs. This is actually available on certain retirement income plans. Well, according to Ministry of Health, 1 in 2 Singaporeans at the age of 65 will be expected to experience severe disability. And as such, when this feature, this benefit kicks in, the higher monthly amount can be used to, for example, hire a caregiver, to pay for nursing facilities, and to in fact make some home adaptations. In conclusion, which one is better? In fact, to each their own. However, we understand that CPF Life is actually not replaceable as it offers a higher rate of return, and as such, a retiree should maximize their payouts. And ideally, they meet their FRS to cover for their retirement income needs. Point 2, depending on each ability to achieve BRS, FRS, or even ERS amount, CPF Life provides a safety net for retirement as long as we are alive. Well, retirement income plan, it was never meant to replace, but serves as a complement to provide additional layer of stable monthly income to meet our spending needs. Retirement income also appeals to individuals who want less exposure to market volatility. Well, for individuals who wish to know more about how Haven guide our clients in their retirement planning, you can write to us to find out more. You can reach us at contact@haven.com. Thank you. Then we end off our lastly, we'll do a conclusion. Sorry, I need to ask you something. The conclusion, do I say that like that? Lastly, we'll conclude the presentation. Can I do that again? And lastly, we'll conclude the presentation. Generally, we enjoy much better. We are generally in a tech@haven.com. Thank you.
Will you do it again?
Do I need to?